Hello and welcome to the latest episode of Damien's Midweek Markets, the show where I talk about what's been going on in investment markets and what to look out for in the days and weeks ahead. Now, sometimes I do this show and lots has happened in the last week. Sometimes I do this show and not much has actually happened in the sort of previous 7 days. And this week is really in the latter category. So as I make this video, we are, despite the sort of ups and downs of the markets, we are broadly where we were when I did this show last week. So that means we're bumping up towards resistance levels. If you use the FTSE 100 as a broad measure, we are still around the 7,000 level. If you look at the S&P 500, then we are still between 4,100 and 4,200. Over the last week, we've seen the Dow Jones gain about 1%, but we've actually seen the NASDAQ 100 gain about 2%. So what we've seen is, despite really the headline numbers not changing much, because the market is in a period of reflection, it's waiting to see what happens, what the drivers will be in markets, particularly concerning inflation. And we've seen some of the things that were laggards starting to perform better, and that means things like tech stocks. Well, it's not massively outperforming, but just a touch, and as a result the Dow Jones has underperformed. So the rotation into cyclicals is taking a little bit of a breather with the wider market. So if you think back to last week, I talked a lot about Bitcoin and the crash in cryptos and how that was bleeding over into the financial markets now, and that's something we're probably going to have to get a bit more used to. Well, crypto started the week on the back foot. We saw Bitcoin continue its descent, and broadly speaking, if you look at the price of Bitcoin, we came down through $47,000, and once we crashed through that barrier, the next major support line really on the way down was the 30,000 level, which is what the price bounced up from. Now we're sort of floating around the middle, about 38,000. And so Bitcoin is kind of in no man's land at the moment, and people are still trying to see what's going to happen next. There's been a lot of carnage. We've had Elon Musk try to save the day again, talking about the prospect of green mining. Whether that actually is something that will happen in the future, we'll have to wait and see. But it does mean that we've seen gold, another one of those laggards, have a positive period. We've now got up above that critical $1,900 per ounce level, which is something it's struggled with for months. And if you remember, we were down to sort of $1,750 per ounce, that we're now back up above that 1,900, which is proving a support line. So you again can see there's the laggards, the things that had been underperforming. Every dog is having its day right now. But broadly speaking, we're getting at people who seem to be jumping out of cryptos, favouring gold. That seems to be the inflation hedge of choice this week. But we've also seen bonds do a bit better. If you look at the 10-year US Treasury yield, we've come back down through 1.6%. We're around about 1.56 as I make this episode. So bonds are catching a bid, so people are starting to buy them. So again, it's a bit of a pause from all the reflation trade headlines that we've had of recent weeks and months. It's just nothing's unwinding particularly, but we're just seeing below the surface a little bit back and to and fro between different asset classes. And that means that, broadly speaking, the market has been a bit calmer. We're not seeing big ranges in any given day on movements on the major indices. We've not seen any sort of 1-2% movements either way for a number of days, really. And it means that the VIX, the fear index, which is the measure of basically future expected volatility on the S&P 500, has dropped down to around about 19. So that's below the long-term average. That means markets are pretty sanguine, pretty calm at the moment. Of course, that can always change in an instant. The VXN, which is the NASDAQ 100's equivalent, that's down to around about 23. So again, fear is starting to seep out of the market. Investors are seemingly more confident. But all of this comes off the back of a slightly strange, almost Inception style headlines, where we're having headlines about the Federal Reserve thinking about tapering and basically unwinding QE and maybe raising interest rates. Now, that came from the minutes of the previous meeting that were released, and that seems, like I say, almost an inception, thinking about thinking. But it wasn't enough to spook the markets, which was quite interesting. So the market hasn't pulled back. It's still in the US hovering towards those all-time highs. But again, like I said, beneath the surface, there are things that people might want to start watching. If you look at US small caps, for example, there are early signs of weakness in US small caps, and sometimes that can perhaps be an indicator or a warning sign of things to come in the wider market, something we'll have to keep an eye on. It's that thing I talk about, breadth. So that means whether fewer and fewer stocks are actually leading the charge, that means that the rally can actually start to weaken and possibly unwind. We're not there yet, but there are some early signs. Now, in tech stocks, despite tech stocks in the US doing particularly well, if you look across to the Korean Kospi, that is very tech focused, and we've seen some weakness in that in the last sort of days and weeks. So that can also be a leading indicator into what could happen in US technology stocks. So we don't want to get too ahead of ourselves with the sort of almost a small rebound we've seen in the growth stocks in the US. So overall, breadth is something to keep an eye on. Interestingly, in the UK, breadth has been pretty good, and the markets are still trying to push through that key 7,100 level on the FTSE 100. And UK small caps have also been doing particularly well. But as I say, nothing major is happening. We're just sort of sitting in a kind of a calm period. Is it a calm before a storm? We'll have to wait and see. I mean, Europe as well is showing some good signs of breadth. So the uptrend in stocks is still there. It is looking a bit tired, but like I say, it's still there. Bonds, of course, a bit. They've not continued to fall. So we're kind of seeing what's going to happen next. And I think next month, when we start getting the next meeting with the Federal Reserve, I think people will be watching very closely. And also in the coming week, we're going to get more inflation data as well. And I think that could dictate a lot of what could happen in the coming weeks ahead, particularly whether the reflation trade gets another leg higher. Because if you look at the commodities, again, commodities have taken a bit of a pause. So at the moment, we're trying to see what happens next. If you look at the pound, I might as well mention that before I close the show. The pound is still in those lofty levels at $1.4. Again, that's partly because of the weakness we've seen in the US dollar. So that pairing, if the dollar's weak, it's therefore makes the pound stronger in comparison. That's held back the FTSE 100 somewhat, but because the currency is weaker, with all these, with the hope that the Federal Reserve might actually just maintain its very easy, loose monetary policy, that's put downward pressure on the US dollar. So the pound is still trying to push out higher. So going back to almost the headline of this episode, we are still pushing towards resistance. We're still seemingly stuck in some trading ranges. And it's really only Bitcoin that's doing some crazy moves. But even then, like I said, it's a range between 30,000 and 47,000. So that is it for this week on Damien's Midweek Markets. As ever, you can contact me. Damien@moneytothemasses.com is the email address. Twitter, Money to the Masses with a number 2. You can find us on Facebook. Don't forget to join our Facebook community group. It's facebook.com/groups/Money to the Masses. That's easy for me to say. And finally, don't forget to join us on Instagram, but please do subscribe to our YouTube channel.